What's up, stock compounders? Brad here. So, in this part two of Bill Miller's interview with Wealthtrack, he really talks about Bitcoin, why he's so bullish on Bitcoin. In part one, a couple weeks ago, he got into a lot of his equity investments, but this is the Bitcoin episode. So, I'm going to share my highlights for the investment case as seen by Bill Miller for Bitcoin. So he first heard about Bitcoin really in 2014. It was a talk from Wences Casares. And Wences Casares was credited with introducing Silicon Valley to Bitcoin. Okay, so Bill Miller went to this talk in 2014. Wences starts off by saying, "Let me explain to you why I own Bitcoin." Okay, I understand why you wouldn't understand it because you live in America. You have a rule of law and orderly governments, and most times relatively low inflation and a prosperous economy. I'm from Argentina, and my family has been there 150 years. We've been wiped out 4 separate times by the Argentinian government seizing our assets, nationalizing the banks, inflating us out with hyperinflation. Bitcoin can't be touched by the government. It's a peer-to-peer, decentralized, independent network, a global network. So, it would make sense through that lens why someone from Argentina could be very interested in an asset like Bitcoin. So Miller bought, shortly after that talk, he bought in 2014 around $200 per Bitcoin. And he bought a little more. He kept adding until it went up to about $500 per Bitcoin. And then he stopped. And he didn't buy more for years until last year, 2021. So Bitcoin went up to like 67,000 last year. And when it came down to about 30,000. And Bill Miller added, what did he call it? He calls it a fair amount at the $30,000 range. So what changed, right? He was buying in 2014, $200, $500 per Bitcoin. And then he's buying again at 30,000. How does that make sense? We're going to get to that. But so he touches on it here. He said, my reasoning was there's a lot more people using it now. There's a lot more money going into it in the venture capital world. Lots of skeptics are now trying it out. Okay, so there's this massive influx of money and people into this space of Bitcoin. He also, so in addition to that 30,000 price point, getting into Bitcoin, he was adding to various Bitcoin related investments as well back in 2021 last year. The first one he talks about is Stronghold digital mining. Okay, and I pulled that up on ticker here. It's a very small company, this Bitcoin miner. He says it's a Bitcoin mining company. The CEO owns 35%, which is very high for a CEO. Perhaps not super unusual for a company this small, 250 million market cap company. So this is a micro cap that Bill Miller owns in his personal account. Looks like they could make $6 to $8 a share in a couple of years. Okay, so it's trading right now at $12.50. So in a couple years, the forward PE on this thing today could be around 2, all right, if they're able to execute in a way that Bill Miller thinks is reasonable. It's a very low-cost miner of Bitcoin. All their electricity usage is from renewables. He mentions they get credits for cleaning up abandoned coal mines. Okay, so a couple different points there on Stronghold digital mining. He also mentioned, he didn't say anything about this position, but he mentioned He also has some exposure to MicroStrategy and some other companies. Okay, so in addition to Bitcoin, he has exposure through a couple other investments. Back to the thesis, Bill Miller's thesis for Bitcoin. Digital gold. Okay, Bill Miller thinks it's probably best to think of Bitcoin as digital gold. He says gold has been a store of value for 5,000 years. Gold is what people have fled to when governments tried to inflate them out, or when the people no longer trusted the government, or at least their currency in the hands of the government. Mentions Roosevelt confiscating everyone's gold in 1933. You had to turn it in or you went to jail. And he says they can't confiscate your Bitcoin. As long as you have an internet connection, you could send it somewhere instantaneously at very low cost. A few interesting points here. Bitcoin is the only economic entity where the supply is unaffected by the demand. Okay? So that, I knew that. I know Bitcoin is kind of capped at this 21 million Bitcoins, but I didn't realize how unusual that is in terms of assets. Even with gold, which is $1,800 today, if gold goes to $18,000 per ounce, there will be a lot more gold mined, because mines that are currently unprofitable at that price point of $1,800 will become profitable if they can, get so much more for the gold. So you can see there, when demand increases dramatically for gold, the supply is going to go up as well. And so it's going to offset some of that price appreciation that you would get if the supply was fixed. He says only 21 million Bitcoin can ever be created. Doesn't matter if Bitcoin is 100,000 or 20 million per coin. There will only be that many of them. And he didn't mention this in this interview, but I thought of, that 21 million cap. It's never going to be that high, because there's already a lot of people who have lost their Bitcoins. There are Bitcoins that have been that are gone. Okay, they can never be retrieved. And I think of this story of the guy who had a bunch of Bitcoin stored on his computer. Right, he had the keys on his computer, and I think, I don't know, maybe his mom decided to toss the computer. So the computer is in the landfill, okay? And I think this guy paid the landfill some crazy amount of money to have a day or a couple days to search the landfill to try to find this hard drive, and he never found it, okay? So there's a lot of cases like that where people have lost their keys. So I don't know what the estimate is now, but the supply, is probably going to be well short of 21 million because of this issue of people losing their Bitcoin. All you really have to believe is that the demand for Bitcoin will grow faster than the 1.5% over the coming years, and the price inexorably will go up. So the 1.5%, I believe, is the annual rate at which new Bitcoin is being mined or brought into existence. Okay, so if demand goes up faster than that 1.5%, the byproduct is an increase in price. Let's see. I've only recently been allowing myself to be described as a Bitcoin bull. Okay, I really appreciated this point. I used to be a Bitcoin observer, right? So he bought in 2014, maybe 2015, and for the last, what is that, 7 years, most of that time, it's been about observation. Okay, Bill Miller hadn't drunk the Kool-Aid yet. He wasn't a Bitcoin faithful until just recently. He says observing the trajectory is a new technology and comparing it to the trajectories of things like, previous technologies, the printing press, the steam engine, railroads, the automobile, or electricity. So he's looking at Bitcoin as a new technology. What does the arc of that new technology look like in terms of adoption compared to some of these previous incredible technologies? He says it's following that well understood path for the adoption of new technologies. And I don't know exactly what he means by this, but that's what he says in this talk. He says, when technologies reach a certain dominance, and they are the leader, it is almost impossible to dislodge them without a very superior technology. So there's that inflection point, sort of critical mass adoption of a technology. He says, I and the other bulls believe that Bitcoin is there at this inflection point, where it's going to be very difficult to unseat Bitcoin as this digital gold. So, those are some points. I think I'll probably summarize at the end what his main points were. But at this point in the talk, he mentions, he's asked, okay, so about half of your personal account is a bet on Bitcoin. What else do you have in there? And he says close to the other half is in Amazon. Okay, so this is an incredibly concentrated personal portfolio for Bill Miller. I mean, it puts Nick Sleep to shame, quite frankly. Having basically half in Bitcoin and half in Amazon. All the rest of the investments that I have are there to support margin debt. Okay. The rest of the stocks could eliminate all the margin debt and have a fair amount left over. If I had to sell all those to pay off the debt, I'd still have Bitcoin and Amazon. So clearly Bitcoin and Amazon are really the anchors far and away in terms of Bill Miller's personal investment account. He equates Bitcoin to an insurance policy. Okay, so you've got digital gold. He also mentions insurance, which, most people see gold as insurance. There are 21 million shares of this insurance company outstanding. In the case the government seizes all the gold, like they did back in 1933, right? So if the government does that again, that's okay. They can't touch this digital gold. When we pulled out of Afghanistan, Western Union stopped remittances. Okay, so people who lived in Afghanistan that were dependent on getting sent money from abroad could no longer receive that money, and that was a big problem. So it takes, that potential vulnerability point, that point of fragility in the system of remittances out. Okay, that Western Union is no longer the bottleneck when you have this adoption of something like Bitcoin. In Lebanon, the lira has completely collapsed. So I'm pretty sure Bill Miller is talking about Turkey here, the Turkish lira. Lebanon's currency, I'm pretty sure it's called the pound. In Venezuela is a failed state. Okay, so you've got all of these examples where governments really failed their citizens in terms of wisely managing the currency of those countries. And of course, Bitcoin has continued right along. That was the insurance policy against these financial catastrophes. Why not gold? Okay, if we're calling Bitcoin digital gold, why not just buy gold? Okay, he says in 5,000 years, okay, very long history that gold has. In 5,000 years, gold has gone from, say, a nickel. Bill Miller wasn't able to exactly pinpoint what the equivalent value of gold was 5,000 years ago, but let's say it's a nickel. It's gone from a nickel to $1,800 in 5,000 years. Okay. In terms of compounding, that leaves a lot to be desired. It's a very long time frame, obviously. In 10 years, Bitcoin has gone from a nickel to $57,000. All right. Okay, that's a very stark contrast, obviously. So why would I own gold? When I'm comparing those two scenarios, why would I choose gold in terms of just the performance of the asset? And you mentioned gold in the last 10 years has gone down. I think it's basically flat over the last decade in terms of the gold price per ounce. And in the last 10 years, Bitcoin is the best performing asset category in the world. All right. So a few other points. We're getting near the end here. Some related to Bitcoin, some not. He's asked, how has the investment business changed and how have you evolved in the last 40 years? Okay. Bill Miller talks about human nature. Human nature hasn't changed in the 4 decades that Bill Miller has been at this. Fear and greed haven't changed. All right. The things that drive humans in this auction-driven market known as the stock market, it's the same. Okay. I really found this point fascinating. The coefficient of loss to gain is 2 to 1. I hadn't heard this measured exactly in this way before. What does that mean? $1 worth of loss in the stock market is twice as painful as $1 worth of gain is pleasurable. All right. And that really, when you see it through that lens, it really distills a lot of fear and greed behavior in the markets and why crashes are so much faster than recoveries. So I really appreciated this point. And then I guess Buffett said this: fear is contagious and spreads rapidly, and confidence only returns slowly, one person at a time. Which is to say, people overreact to negative events, right? That fear is so much stronger than the greed. And then finally, how have you changed your approach? Has your approach changed at all in the 40 years that you've been investing? He says, yes, I was a pretty conventional Ben Graham value investor, a Warren Buffett aficionado. I was much more focused on accounting-based metrics: price to earnings, price to book, price to free cash flow. Those metrics toward the end of Ben Graham's life, and Ben Graham actually said this, were having less and less predictive value of how an investment was going to perform moving forward, right? If you bought, this is a brilliant example here with John Malone. If you bought the old Telecommunications Inc. run by John Malone, when he became the CEO of the company, and you held it for 25 years until he sold it to AT&T, $1 became $900. Okay, that's a 900x in 25 years, and they never reported a profit. Okay, that's the big takeaway here. You've got a 31% CAGR, compound annual growth rate, for 25 years, and the company never reports a profit. All right, so obviously, if you're looking at something like price to earnings, or some of these conventional accounting-based value metrics, you're never going to see this opportunity. So we shifted from value metrics, right, the accounting-based metrics, to is there any value creation here, and how enduring is it? All right, so instead of using what everyone else can see, right, the numbers on the financial statement, let's dig deeper. Do we really understand this business and how they're creating value, and if they're creating value? And if they are, how likely are they to be able to sustain that value creation over time? So more emphasis on the future and what it could look like than the past and what it did look like. All right? I think it's a really important point there. Which is hard, right? It's easy to look at the past and extrapolate into the future, what the company did in the past. Everyone can do that. It's all right there. But the distinguishing feature of a great investor, and I think one of the reasons Bill Miller has done so well for his investors, is understand the business well enough to be able to, with some degree of accuracy, predict what that business is going to look like in 10 or 20 years from now. And then, of course, what's your one investment for a long-term diversified portfolio? Bitcoin. All right. Bill Miller recommends Bitcoin. He says very few people own it. If you put 1% of your assets in it for diversification and it goes to zero, you can afford to lose 1%. But the financial catastrophe insurance that you gain from putting just that 1% of your assets into Bitcoin can really save your butt in a catastrophe. So he points to track record, the best performing asset over the last decade. Underpenetrated, there aren't many people who own it. So I guess what he means by underpenetrated, there's just a lot of room for expansion because there's so few people who own it. Insurance against financial catastrophe, fourth, can go up 10x or even 50x. Okay. I don't know, what kind of numbers he's running behind the scenes to estimate 10x or 50x. Maybe he's just using these previous points as guidance that, hey, there's a lot of room to run with this thing. And he says 1% is prudent and sensible. All right. And he ends with that point. So, just a lot here to chew on from Bill Miller. This was a very dense talk. I took 6 pages of notes. So really appreciated Bill Miller taking the time to just put his thoughts out there, his kind of thesis on Bitcoin. He's going to get a lot of pushback. But the thing I really appreciate about Bill Miller is he doesn't care. He knows, being bullish on Bitcoin in the value investing community is still quite challenging in terms of the pushback he's going to get for this. But I respect that he doesn't care and that, he's going to put his thoughts out anyway. That's something I appreciate about him. So curious what you guys gleaned from this. I know a number of you have already reached out on Twitter saying, there's nothing new here. There's no compelling argument in here from Bill Miller on, why Bitcoin makes sense, why it's kind of an intelligent investment. Bitcoin doesn't generate cash. It's not going to pay you back dividends over time. How do we value this thing, right? And again, Bill Miller really just points to, well, it's digital gold. So if you already have exposure to gold, if you want catastrophe insurance, put a tiny bit in Bitcoin. So it's not like he's saying we should back up the truck to this thing. I'm guessing Bill Miller initially maybe put 1% in, could have even put less than 1% in back when Bitcoin was trading around $200. And still, with less than 1% 7 years ago, that could easily have ballooned to half of his personal account. So pretty impressive story with Bitcoin. Kudos to Bill Miller for getting in early. And I also appreciate his perspective on it early, right? He didn't see it as an investment necessarily. He wasn't bullish, so to speak. He was observing it, okay? He bought in with a very small percentage of his net worth, and then he studied it. He tried to understand, hey, does this technology actually have legs? Is it going to be adopted by the masses? Is it going to be one of these technologies that takes and dominates in that arena? So I think we're still seeing that unfold. I'm still unclear about how dominant it's going to be moving forward. But a lot to chew on here from Bill Miller. So kudos to Bill, kudos to Wealthtrack and Consuelo Mack for doing this interview. And yeah, let me know your thoughts, guys, in the comments. And with that, I will leave you all till the next one. Take care.